Our next guest is one of the world's leading metals experts. He's a technical analyst, has been for more than 25 years. He has specific views on where gold, silver, and oil are headed. Gary Wagner is here now. He is president of Wagner Financial Group. He also writes the goldforecast.com newsletter. Gary, thanks for joining us here on Money Moves. So gold has really had a standout year. I mean, before today, it was up around 10% this year. The past decade, it's really been a haven with all the volatility that we've seen, especially the credit crisis. Where does it go in the new year?
Well, what I'm looking for in terms of market timing right now is if we look at the last 3 years, we've seen rallies that have taken the market to record highs approximately to October or November. From that point, it typically had sold off and bottomed somewhere between January and February of the following year.
So why do you think this is linked to a calendar?
Well, I'm just looking at the market moves themselves and the cycle itself. I'm more an Elliott wave technician, so what I'm looking at is the fact that although when we see gold, it has risen for 11 years, it's produced very good results, almost double digit this year. But when the market sells off, we have to see a technical approach and look at a technical approach to get an idea of targets of where that market might sell off to.
So what are you looking at now next for the next level of support?
Well, we broke 1580, so the next level is going to be 1534. 1534 was the low that it hit on this last dip. If it holds support there, then we'll go into an extended rally. If it cannot, the lower target below that is 1440.
Now, on the other side, if you were to take the bullish argument, just how high can gold go in 2012?
Well, I'm projecting that it will make a new record high, and our old record high this year was 1920. I'm looking for $2,000 gold through next year and the next rally.
And then you say we're going to see a correction, right?
That is correct, yes.
And why is that?
Well, the markets don't tend to move straight up or straight down. We can look at the fundamentals involved, and right now, one of the main targets is that strong U.S. dollar and the fact that the consumer confidence has gone back up in the United States. But irregardless of what the fundamentals behind it, there seems to be a pattern or a natural cycle in which gold has been moving if you chart it over the last 8 to 10 years. So
essentially you're using a combination of fundamental analysis by following the trends, and then you're charting these moves, and so you're just analyzing what you see in the charts.
Exactly. I look at myself as a hybrid technician, and that I look at the fundamentals for my underlying bias. And my underlying bias right now in gold is bullish. But in terms of the peaks and valleys, the ebbs and flow, I need to look at my charts and the technical aspect to look at where the market might go to.
So you do think $2,000 an ounce is easily achievable in the first 6 months of next year?
I don't know about the first 6 months, but I would say by the end of 2012, we should see our rally peak out, because the rallies we've seen over the last 3 years have peaked between, well, it was September on this one, but it's been October and November on the prior years.
How do you see silver? A lot of people call it the poor man's gold. Do you think silver will trade more or less in tandem, pattern-wise, with gold?
Pattern-wise, absolutely. It tends to follow gold, and it also has the unique variable of being an industrial metal. So when you have a forecast that's bullish in terms of the global equities markets, you will see silver outperform gold in terms of percentage gains. But it will move in tandem with gold.
Can you give us a price? How high could silver go in the new year?
You know, I'm looking for it just to go back to the recent highs. It hit $49. I would be satisfied seeing $40 to $42 silver.
I know you're also charting oil. You've done an equal amount of research with oil as you have with gold and silver. Today is the first day lower in 7 for oil. We were just hearing from Zara Burton on that. Where do you see oil going? Well,
you know, I think that it will probably find support at 100 and begin to trade off of that.
Fundamental reasons. We heard Zara talking about the Straits of Hormuz, some of the more aggressive statements that Iran was making. How much does that factor into where you see prices going?
Oh, it factors into it a lot, but you also have scenarios like when the tsunami hit in Japan, the price of oil in the Asian basin just skyrocketed, and the global need for oil continues to rise. And anytime you look at supply and demand continues to rise, demand continues to rise and supply stays about the same, you're going to get a scenario of increased prices.
Some analysts have said the U.S., believe it or not, will become more and more self-sufficient. There's going to be more and more drilling in the Gulf of Mexico. Do you see that happening? Do you agree with that? Is that what you're hearing as well?
I would see, as oil gets more expensive, it makes more sense to do the types of drilling sites that take more capital to initially undertake.
Okay, Gary, we thank you very much.
Oh, it was my pleasure.
Joining us there, Gary, of course, is a chartist, and Gary Wagner, I should say, president of Wagner Financial Group.